Well, given the fact that steel prices have rallied and how, I guess it's a little unsurprising that JSPL or Jindal Steel and Power has delivered a record EBITDA number. It's standing out in the metal space as well, given the fact that the deleveraging quantum as well has been extensive, 20,000 crores in the last 5 years, with the net debt now just at 19,300 crores, with 6,300 crores of net debt reduction only in Q4 of FY21. Plus, there's been 2,400 crores of prepayment as well. In terms of its numbers, the standalone results were a tad bit below expectations because of the lower external pellet sales. But otherwise, the fact that the increase in long product prices has been lower than flat product prices, this is something that may not be exactly in the benefit of JSPL. But yeah, nevertheless, great growth in the profits as well. In the profit after tax, it's surged quite significantly to almost around 3,400 crores on the standalone front and 2,933 crores on the consolidated front. No complaints over there. Remember that Jindal Steel and Power does also have the entire divestment bit going on. There's the Jindal Power divestment. We saw a lot of queries on the possibility of elimination of ICDs from the deal structure, the timeliness of the divestment as well, given the fact that they just won the Gare Palma coal block. And plus, we are expecting to see power sector profitability only improve now. So there was that question on timeliness that was asked. But yeah, the management has said that, look, the focus is also on the entire ESG bit, right? This is what we call as fossil fuels, dirty power being generated. And the management wants to steer clear of that right now. So hence, I guess this move also wins them points on the ESG front too. But now that, the deleveraging drive is behind them with, all these divestments, now the management is focusing back on expansion, on growth projects. The key among them being the doubling of the Angul plant from 6 million tons to 12 million tons. They have kept aside a CAPEX of 18,000 crore rupees over the next 5 years. And this is something that, I guess will be in focus on. There is going to be a major chunk of this CAPEX allotted towards volume expansion, and then a little bit towards improving the margin as well, improving the product mix as well for Jindal Steel, which will in turn help in the profitability of the company. Of course, the management has said that they will continue to endeavor to make JSPL a zero net debt company, and all future expansions, will be guided by an outer cap of keeping the net debt to EBITDA ratio at 1.5 times. So this is something that will be watched out for, and how much JSPL is able to fit into that. There are also some pellets plant expansions as well that will be watched out for. So yes, for now it's the strong steel momentum that is going to continue aiding JSPL, not just in Q4, but I suppose for the first half of FY22 as well.